Good morning. This is Josh Hayes with Hedge Plus, and here's the market monitor for Thursday, August 21st. Let's go ahead and start with the crop tour since this is the first time recording this week. The crop tour continues to report impressive yields, large yields for corn and beans, or at least pod counts for soybeans. It is showing some spots with some issues. Some places are maybe perhaps a little bit lower than expected, but overall, the majority of the reports are what you'd expect. Big numbers, crop in great condition, setting new highs in some places, falling just short in others. Nothing obviously to make people start to think 188.8 is too low or anything, or that we have too low of an estimate for beans, but also not enough issues to move the market. It's just not really having much impact. I remember this time last year when people thought the USDA might be a little too low. The crop tour came in and made everyone feel like we were going to have a monster number, and it was a pretty bearish week. I don't think it really affected the market too much last year either, but the sentiment was definitely there. This year, it's more of a non-story. One thing I find interesting right now as we continue to look for a deal with China to get them to start buying our beans. China is doing obviously everything they can to avoid that right now, from paying much higher prices to buy from Brazil to trying to making first purchases from Argentina. And there was actually a cargo ship diverted this week en route from Argentina, and it just brings to light some of the quality issues that China faces. It just, to me, it tells me there's going to be incentive there for China as well, to get a deal done and to be able to start purchasing from us again. Again, they're paying a higher price from Brazil when they attempt to purchase elsewhere. Argentina's basically got the same price as us right now. They run into quality issues. So there's definitely an incentive for China to start buying from the U.S. again. I definitely think it'll happen. Unfortunately, it's going to take probably until after that meeting between Trump and Xi to finalize the deal. And obviously, there's a concerted effort right now to bring that to the president's attention, the great need. It is a great need, and obviously it would help put us over the top. That's when we think we'll see prices take the next leg higher. But in the meantime, sales are getting made. We are considerably more affordable than Brazil, and most countries aren't on a mission to avoid buying from us right now. So purchases are being made. That will really be a catalyst when China buys soybeans from us. It'll be a catalyst to send us higher. So hang in there, wait for that. That should be it should be pretty well expected that it'll happen. More flash sales with corn on Wednesday. Mexico and Colombia continues to show we're getting these sales made. Our prices, as you'll see here in a minute, continue to be the best in the world. There's absolutely no reason not to buy from us unless you're in some kind of trade dispute. And even some countries that are, like Japan, continue to buy from us even as we hit them with high tariffs. The wheat market has faced a little bit of price pressure from raised Russian wheat production, and Russia is starting to get their crop to market at a more accelerated pace. But we rejected contract lows yesterday and bounced off. That was a pretty significant reversal. That reversal continues overnight. At the very least, it does suggest that we've got a pretty solid floor for wheat around the 520 area on the December contract. But we'll see. I do think some of the potential to go much higher is capped by the wheat that's starting to hit the market at lower prices out of Russia. We are still the lowest priced, and we should still have some strong export numbers here. We'll have the export sales report today at 7:30. but I do think that market's somewhat capped. It is good to see it bounce off those lows, however. Taking a look at grain weather, it's going to be dry and cooler in the United States for the next 7 to 10 days. Dryness is starting to build in certain places. It is being accompanied by cool weather to lessen the impact of that drying. Most places do have plenty of soil moisture built up. This could become a problem in parts of Illinois, Indiana, and out east if it stays dry too long. In Mexico, they are getting monsoon rains that are aiding dry northern areas. In Russia and also in the Ukraine, the southern area is starting to stay dry. Or they've been dry and they're continuing to be dry well into next week. That's a building issue there. Nothing that has impacted the markets too much or changed any yield estimates yet. And in China, they continue to recover from the periods of drought they had earlier this year. Recent rain has been very beneficial to their central crops. International cash prices, you can see United States and Argentina have the exact same price for corn. If you are a country looking to buy right now and there's transportation cost isn't an issue. Obviously, the United States at the same price as Argentina might have a little bit better quality. Definitely have the lowest price with soybeans right now. You see quite a big gap still remains between the United States and Brazil. Also have about $11 advantage over Argentina per metric ton. And we continue also to have the lowest wheat price. That gap is starting to narrow, and I think you're going to see it narrow quite a bit more coming up here as Russia's price comes down. I think with this war with Ukraine does end, I think it will allow Ukraine to lower its prices as well. And even we've already started to see some of that gap being closed there. Finally, taking a look at the overnight prices. Please note that the wheat, the most heavily traded wheat contract, is now December. September wheat is still trading about 20 cents below this, but regardless, we've seen about 10 cents improvement, if not a little bit more, here in the last 24 hours. Corn up on the overnight as well. Corn is rejected pretty soundly. Anything below $4 or move below $4 was quickly reversed, but limited upside right now. And we definitely think there's a high probability that we're going to drift down for a while and then potentially even challenge previous lows for the year once all the old crop comes to market. And we think that's going to be coming here in the next 30 days or so. Soybeans down a little bit on the overnight. But like I said, the sales have remained strong. There is some concern about mandates and for biodiesel, but that's going to be sorted out here in the next couple of months. That's all for today. Tomorrow we will have Jason's Feedlot Focus, his report on hogs and cattle. And I just hope everyone has a good week and hang in there for better prices. If you do have sales that have to be made at these levels, definitely be prepared for a buyback. Talk to you later. Thanks.